All right, initial print is out. We got stocks higher here. NASDAQ a little bit higher. Let's take a look at that. Dollar index was also lower. That would suggest a little bit of weakness. There it is, 143K. So a little bit of weakness in the jobs print here this morning. Not a ton of weakness, but some weakness. You know, had we gotten into like a 100K, that would be considered largely weak. Unemployment rate also went down. So there's where you're getting some positives in this. Unemployment rate ticked lower. So there's some strength for the labor market. Slightly lower here. Wage growth increased by more than expected. Interesting response here today. Not an all green or all red reading. So we're getting a little bit of a mixed reaction here. Look at that. Russell lower. Now stocks moving lower. And that is what happens sometimes when you get these mixed reactions. I just want to warn everybody who's listening. I mean, obviously, it's probably too late if you were gambling the spike, but a lot of people, what they do is they try and do buy stops and sell stops on the news, and they think they're smart, and then it does this. You do not want to be that guy today, because that just crushed a lot of people. A lot of people got faked out trying to buy the spike. You got to be careful with that stuff. I'm not picking on anybody if that was you, but you know, you live and you learn, and that is the painful reality of trying to trade news. Is it's very, sometimes when you get a mixed number like today, you get a mixed reaction. Look at this, guys. My goodness. They revised the previous number up to 307K. Wow. Okay, so actually, I take it back, guys. This is a hot jobs number. This is a hot jobs number. Okay, so the revisions were still coming in when I was looking at this. Whoa, that's strong. I take it back. It's not a mixed number. It's strong. Because look, okay, yeah, we missed a little bit here. We added significantly more jobs to the revisions. Revised from 256K, we just added 50K jobs to the last print. Even if we missed here a little bit, we added 50K jobs here. Average hourly earnings were high. Unemployment rate ticked lower. This is a hot print. That is a hot print. Okay, so I apologize for the initial, I guess I didn't see the revisions at first. They came out a little bit later. With revisions in mind, this is not a mixed print. I would say that this is a hot print. You have unemployment rate dropping, so more people who are looking to get employed got employed. They revised the previous number up, showing more jobs were added. When you take a net look at this, when you take a look at how many they added here, 143, okay, that's a little bit light, but they revised this one number up, adding 50K here. Let's be really, really basic here. Let's say we missed 25 here. So we missed 25 here and we gained 50. That's a net of 25. So we could just say plus 25K compared to expectations. That would be hot, right? Hot here, hot here. That's a hot labor print. It's hot in here, okay? Chill out. Dollar index up to 108 here. Very interesting response here so far from the market. You had an initial pop higher. Stocks are slightly lower. There's not a huge reaction here. Bitcoin slightly lower. Dollar index is the winner so far. Yen crosses slightly higher here today. Mixed response from stocks because, again, they're kind of saying, look, a strong labor market, but also that might hurt the chances of rate cuts. What we can see on the yields front is, yes, yields are jumping here today off of a strong labor print.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
I like the upside for gold despite this number. I would actually not personally be looking to buy it here, but if we get a larger pullback, I've been looking at a possible long on gold. I like that setup a lot. That's actually a fresh, by the way, new gold alert on the Edgefinder, by the way. I made a post about this in our Discord yesterday. That's a big deal. Gold has been on the sidelines, been neutral for some time here. We're getting a bullish reading on gold. Now, for the new traders out there joining the stream, gold getting a bullish reading on the Edgefinder does not mean I go out and I go shopping right now for the price of gold. What it means is that bullish, think of the top setups algorithm. It's looking at sentiment indicators like the commitment of traders data, retail positioning using like the put to call ratio, seasonality. It's looking at the momentum of the market. It's looking at GDP statistics, manufacturing PMI numbers, services PMI numbers, retail sales numbers, inflation numbers, employment numbers like the numbers that came out today. That's what it's looking at to generate this reading. And so when we see all this stuff kind of being calculated and computed, when you get a gold bullish reading, what that means, it doesn't mean, oh, I'm going to go buy gold right now. What that means is that if I can get the right setup according to my own strategy, I'd be looking for pullback buys with a good risk management setup as always, right? Stops in play. I'm risking a small amount. I'm not going to get crushed if I'm wrong about an idea. But that's how I use the edge finder. The edge finder is not necessarily a timing tool. It's more of a conditions tool. Are things favorable or not favorable for gold on the edge finder at this time? Gold is actually a favorable consideration on the edge finder right now. Same thing with stocks. And with strong labor market data, I'm not a hater of stocks. I'd actually prefer strong jobs data with a little bit of inflation rather than high inflation and weak jobs numbers, right? We don't want that. Or basically the conditions I would say right now for stocks are quite good. You have a strong labor market. Your bounce back here today, that's a strong labor number that we got today. You've got company earnings that have been really good. I think there's a little bit of a Trump put and Powell put in the market right now. Basically what I mean by that is that the Fed has room to cut rates further if need be. And Trump also cares a lot about what the stock market does. So he doesn't want a huge, sell off in the stock market. At least that's my guess. I think, last time around in his previous administration, Trump was the stock market guy. He constantly fixated and bragged about his stock market returns under his administration. So I think he probably feels the same way this time around. He wants the stock market to do well. So that's what we would call a Trump put. Same thing with a Powell put, right? They have room to cut rates. Those are back pocket play cards essentially to keeping the stock market doing okay. And they won't call it that, but that's in my opinion what it is. We just had the jobs print come out from the United States. Jobs report, the NFP report. We had some interesting data here. First of all, we could talk about the obvious one. Unemployment rate actually went down from 4.1% here to 4%. So that is a strong print for unemployment rate. When we take a look at average, and I'll do the easy ones first, average hourly earnings also ticked higher. That is a strong print for labor and also slightly inflationary. And then finally, this may be confusing at first for some, but correct me if I'm wrong, but what we have here is a weakness in this number of jobs added, but the revisions tell the story. We had a significant uptick in revisions for last month, overall giving us a pretty strong jobs gain. Unemployment rate ticked lower, wage growth higher. It's a pretty strong report for U.S. jobs.
Yes, you're right on that. So actually, everything is quite strong at the moment, even though the actual number seems to be a little bit weaker. But if you check it, maybe for 2 months, it's actually not really that bad.
Mm-hmm.
Maybe next month, because I saw on the news the Musk, or let's say Trump, it's firing some other department and stuff like that. Maybe that might happen, might show on NFP next month. But for now, I think the dollar, it will just keep being stronger. I don't see any weakness at the moment, so I think it's doing good.
Yeah, and they've got, as you mentioned, the dollar index here a little bit higher this morning. Here is the dollar index finding support right around that 107.5 area once more. Not a huge move one way or the other here today for most markets. You've got stocks pretty much slightly positive here today. Dollar index slightly higher, and gold barely budged on that NFP report. Why do you think that is? I mean, gold here just continues to be strong, even though this print was pretty bullish for the dollar. It doesn't seem to have done much to gold.
Yes, I think we actually have some serious geopolitics going on. And for investors, that is actually the simplest asset that you can actually have during this time. As Trump is actually good for business, it can also be bad for other people or other investors somewhere around the world. So I think that is also pushing that. The tariffs are going up. There were people who were just making money out of that because maybe they were selling some stuff which were affordable. And now they have to think twice that, okay, tariffs are going up. What's next? What are we going to do? And those geopolitics around the world, they also makes gold to be way too attractive. We still have geopolitics, tensions in Russia and Ukraine. That also still push gold to go higher, even though now at the moment Middle East it seems to be calm. But the statement from Trump saying that we might maybe take over Gaza, that is also a red line, and that might make gold to be extra stronger. I think when we check it fundamentally, I think we still have like a serious long way to go. We might reach 3,000 anytime soon.
What are your thoughts, Kenzo, on the stock market here today? S&P 500, NASDAQ, they're not quite at the highs, but they look like they're trying to get back there. Are you in any positions, or are you looking to get into anything?
I was out because I was just waiting for NFP. I tried to guess what is going to happen. So I never had a clear answer. So it was better to stay out of the market. But at the moment, it's difficult for me to go in because we are very closer to that resistance. So I rather wait for the market to break out. That will show me that, okay, we are still on that uptrend, because before we talk about the resistance or the support, already we are on an uptrend, which means we're supposed to continue with the trend, or let's say we are supposed to continue with the long positions, but I can't buy at the highest level because that might be very risky. The market might still reverse, touch that support again before we go even higher. So I think it's better for me to wait for a bigger move at the moment.
Yeah, I'm in the same camp with that too, Kenzo. Is like, when you have markets kind of near those all-time highs, I just get a little bit skeptical. It doesn't necessarily mean that I am less bullish. I still think that this market looks really strong, but I would rather, like you're saying, I'd rather either get it at a pullback to this level if we get that kind of move, or at the very least kind of wait for new highs to be breached, then look for pullbacks there. And, the cost of doing that sometimes is that sometimes you miss a little bit of the move if it doesn't pull back for you. But, I remain overall bullish, looking for pullbacks. And I just think that at the end of the day, the risk to reward to waiting for a setup like this, where I can put a stop loss and control risk if it were to tank, would be better. I mean, if we were to take longs right here, let's just say as an example, and the market did this move in yellow, right? If we put our stop loss here, that's a very large loss, very large risk that we would have to take to enter right now, as opposed to if we were to be patient and selective, wait for that market to pull back to a key level of support. I think that the risk to reward looks a lot better there. So I personally will be waiting for either a dip back towards the lows of this level, if we get that, or a breakout and a retest of these highs on S&P. So I do still like the upside for NAS and S&P, and Dow Jones too. Dow looks really interesting. What are your thoughts on the Dow? Would you trade the Dow? I know you're preferential to NASDAQ. We talked about that last week, but would you also trade Dow?
No, to me, it's still the same as NASDAQ. We are playing around the resistance area. I can actually, sometimes I take trades on USDT, but at the moment, we can see that the market, I like to call this area, especially the one on NASDAQ, it's like testing area. The market tries to test your patience, if maybe you still have that patience, because it will play around that. And if you get early, sometimes it's going to punch you there, even though you know what was going to happen or what might happen. So mostly you just have to wait. I think USDT is also doing the same thing. It's just playing around the resistance. But that shows us that we still have enough bullish momentum, because we don't really see much of a breakout, but it's like we're just waiting for that push to break out. I thought maybe NFP was going to do that, but it seems like we're still going to wait for another push, maybe later on, or we'll just have to wait and see. But a breakout, that will be a very good thing for us. But unfortunately, it's waiting game. You just have to wait. You see, sometimes, unfortunately, when you have the rules and when you wait, the problem is sometimes you can miss a nice move, as you did mention that you can miss a very nice quicker breakout. But what I like is you did not really lose anything. The market will still get you there, or you will still actually follow the market nicely and you will still eat. So yeah, that's what I see it there.
Well, you said something there too that's really important, Kenzo, is like, so sometimes, and I know many people probably have experienced this in the audience, I still think about this. It's like, okay, I'm bullish on the indices, and a thought will creep into my head like, you know what, I think it's going to break out, it's going to go higher, I'll just buy it now. And here's the thing is, even if I bought it right now and the market did rip, what did I just do psychologically? I just gave in to what I call my monkey brain. My monkey brain is basically my just emotional trading side, right? I'm not thinking very straight with that. Well, the problem is if you start saying yes to your quote unquote monkey brain, your intrusive thoughts, whatever you want to call them, if you start flexing that muscle or training that muscle to allow yourself to do things like that, you're more likely to over leverage, you're more likely to enter when you're not supposed to take emotional trades. So part of discipline, even if it costs you a couple bucks sometimes, like if you miss a trade or something, part of that psychological discipline to say, look, I am waiting for either a breakout and pullback and continuation setup, or this and this. If I'm waiting for those setups and I'm forcing myself to wait for that scenario, I'm doing the opposite. I'm training my brain to say, look, I have to be patient, be disciplined, wait for the right setup. And if you do that, you're less likely to make silly mistakes, right? You're less likely to over leverage or get emotional or, go on tilt, as they say, when you make a bunch of silly mistakes, and that can cost you big. So even if you miss out on a trade every once in a while, and that feels terrible, it's a horrible feeling. It'd be better to miss a trade and train your brain to do, disciplined trading only and miss something than to give into it and blow up later.
Exactly. No, you're right about that. So actually, when it comes to that point, or let's say when emotions start to work like that, the best thing that you can do is to make sure that you don't follow what ifs. If maybe the market breaks, I will be in early 1, 2, 3 like that. So that is actually a trap, because sometimes you can get in and make profit. So tomorrow, once you see something like that, you will be saying, okay, yesterday I did smash the market, so now I'm going to jump in. And now you're messing up your plan or your trading plan. But the advantage of waiting is you have two options. You drawn those options. It's either you're waiting for the market to break out, then you will be in very nice, or maybe the market might reverse going lower. So now you're waiting for two options. It's either the market breaks out or maybe the market reverse. You are not actually in any trade, so it's easier for you to take any decision without any emotions. But once you start to work with what if it breaks 1, 2, 3, that is a problem. Once you start to have those thoughts, just know that something's not really going to go well. Just step back and follow whatever that you follow as a plan or something.
Yeah. Well, and for those who are maybe feeling the same way about gold, we have a lot of gold traders. We could do the same psychological exercise here for gold, which is, look, you've had this big run up. I am sure, I know I've even gotten comments of people saying, I'm feeling FOMO on this gold move. I've been bullish, but I missed this move. And, all you can do in that scenario, as Kenzo's pointing out, is like, okay, like if your rules say, for me, I like gold pullback longs at this level. We have edge finder confirmation for my system. That's what I need. I have a support level that I like. So that's what I'm looking for. But until we get that move, there is absolutely nothing I can do with the price of gold. I'm not going to short it because it's in an uptrend and because the edge finder is telling me to be more bullish. I'm not going to chase it. I'm not going to go long because, again, I'm giving into my monkey brain intrusive thoughts. And all I'm going to do is I'm going to wait. If it comes down, great. If it continues, then am I going to be annoyed? Yeah, but I'm not going to do anything about it. I'm just going to say, well, I missed this. That stinks. And I'm going to move on with my life. But the second you start saying, oh, well, it's not going to pull back, it's going to keep going, that's the second it does this, right? So sometimes you wait for the pullback, and after all that waiting, it still does this and it doesn't work out. So that's why trading is hard. It's not easy because the markets are just not always predictable, and sometimes you don't get the pullback, or sometimes you do get the pullback and you still lose money. So that is why trading is difficult. Is markets can fake you out, they can be tricky, and can be very confusing.
Yes, and the most painful thing in trading is sometimes you're forced to get in confusing trades, and most likely you will actually lose. But the most profitable trades, they are quite simple. They are quite simple. You can see when it reverses, where like maybe let's say we can go maybe on Nasdaq just to check that ranging structure. Just look where the support is. You might try to play around with Nasdaq where it is, maybe trying to buy, and it reverses. So once it reaches that support area, if you were waiting, it's just going to be the most simplest trade. But unfortunately, you did not really wait, because now you're holding maybe a bigger drawdown there. So once you go in, you might not really take the same advantage of that simple trade. Mostly the most beautiful trades are straightforward. They are simple. You don't really have to think twice.
Yeah. No, you're exactly right. I actually made a tweet yesterday, Kenzo, just about how you have sometimes the trade that feels like it can't possibly fail is the wrong trade. It's the trade that doesn't work out. And the trade that you just know, I don't feel like it's going to work, but my system says to take that trade, that's the one that typically does work, right? It's the one that you feel overly confident about that gets you in trouble. It's the one that you feel kind of so about. As long as it sticks to your system, that can be the best one. So yeah, I mean, really great stuff here for a fundamental Friday. I know we kind of dipped more into the psychological side, but I think that Kenzo and I, we talk about every week, guys, we talk a lot about indices as we both trade them quite a bit. But one thing that I've been thinking about, Kenzo, which has been difficult, I trade indices, but I also trade a lot of other things. I know you do as well. This has been a choppy market for indices. It's been very hard to find direction here. Now we're getting back close to those highs. Let's see if we get the breakout, but it's possible that we just continue to see 1, 2, 3, 4, maybe a fifth time where we start to see kind of the choppiness continue. One thing that I've been doing is I've been focused on other markets. I've been trading a little bit of Forex. I've been watching gold. There's just other markets that are moving a little bit better for me. Like, for example, I actually traded pound yen on the short side this week. We have got some momentum here forming to the downside. So that's another thing I think is important for listeners is if you're somebody who is multi, market focused, sometimes the best thing you can do is just walk away from a chart that's not moving correctly. Like if it's not moving well for you, you can find other things to trade. And talking a little bit post NFP here, big number today. We had some interesting responses. Dollar index a little bit mixed. Wanted to get your thoughts. What is your chart of the day, if you will?
It's still Swiss yen, actually, and euro dollar, as it has been. So yeah, unfortunately, I can't give you an interesting answer. But yeah, as for the numbers, doesn't really lean me either way. I mean, a tick down in unemployment is good. Tick up in hourly earnings is good. Obviously, NFP did miss slightly. Previous was revised to 307K, which was slight positive. But yeah, the reaction on the dollar doesn't really mean much to me. The numbers don't mean that much. So I'm staying cautiously bullish on the dollar for now.
Gotcha. Yeah, no, I think dollar index still sitting here, 107.8, hasn't moved too far. I mean, it's been a very volatile week. You had the tariff stuff, spooked the market and then completely reversed course, and now just kind of sitting back to where we started. Seems like the bulls kind of have continued to hold this area steady, but we'll have to see. If something was going to break it this week, that level of support, it would have been NFP report numbers. But again, overall, the numbers a little bit slightly positive overall. So we wouldn't call that, anything for the bears to really grab onto, at least for now. But markets has been really choppy for the dollar index this week without any sort of clear directional bias there. Yen crosses are interesting though, James. We have, across the board here, overall, a pretty strong week for the Japanese yen. Here's the JXY in case, listeners don't already have this as one of their watch watch list items on TradingView. Just like the DXY, there is a JXY, which will view the Japanese yen against a basket of other currencies. JXY's had a really strong week. And, of course, that equates to yen crosses moving lower. You got dollar yen, pound yen, CAD yen, everything kind of moving lower here this week. So, James, why Swiss yen specifically? You've got that one as your chart of the day.
Yeah, well, chart of the days at the moment is like chart of the year, because
Chart of
it's
the year.
yearly focus at the moment. Yeah, I mean, I'm looking to get in really for the rate differentials. So I'm looking for the S&B to continue rate cutting really until they're potentially in negative rates. Again, that's just some word on the street. That's not a official economic outlook just yet, but it's a possibility. And obviously with the yen or the Bank of Japan on the road to normalization, I think there's potential there for quite a large move to the downside on Swiss yen specifically. So I'm looking really down here to the low 100s between 135 to 105. But I'm not really in the trade yet. I'm waiting for a pullback on the daily time frame, because we've broken some supports. The RSI slightly oversold. We've broken out the Bollinger. So I'm just waiting for some sort of pullback, and then I'll enter into a starter position, just see how the market goes. But yeah, that's about it. And obviously euro dollar still sat in that one, as I always am.
Yeah, the Swiss yen specifically, one thing that's interesting about that pair is that in terms of the carry cost to shorting the yen, that's probably your best bang for the buck, right? Because if you're, the way the carry trade works, just to keep it really simple, is that if you are looking at USD JPY, right, the US, offers a higher interest rate. The Fed offers a higher interest rate than Japan. So when you go long the dollar, short the yen, you actually borrow yen and you take that money and you go buy the dollar. That's what's happening. And so when you buy the dollar, you're getting paid a positive carry, even if it's, small, it is paying you day over day. That's what swap is in your brokerage account. But if you do the opposite trade, you actually have to pay for that trade. So when you short the dollar and you take that money and go buy Japanese yen, which yields very little, right? You actually are, buying yen, shorting dollar, and that gives you very, very little gain. You're actually paying the borrow cost for the dollar. So long story short, certain currency pairs, they're not equal in terms of what you have to pay or get paid overnight for holding that currency pair long or short. So Swiss yen, these are two currencies that offer very low interest rates, the Swiss franc and the Japanese yen. So when you actually short Swiss, buy yen, it can be very attractive. Also, you've got the perfect chart for this, James. Let's show your screen.
Help you segue into a little promo for the Edge Finder here.
Yes.
So yeah, if you have the Edge Finder, there's a very simple thing called the carry trade scanner, and this essentially just tells you what swaps you will be paying or what you will get paid. So in this example, we're talking about Swiss yen. You can see the base currency, so the Swiss is at 0.5. We can see the quote currency, so the yen is also at 0.5. So we're actually not paying anything either way. So we don't pay, we don't get paid. It's just a trade. But having said that, if I am looking towards that longer term rate differential and the Swiss potentially going to negative rates, then we might end up with actually positive swaps by the end of the trade.
Yeah, that's a good point too, to think about, and then if we kind of, I've just pulled it up for myself as well too. If we think about, like, let me see if I haven't even pulled up the carry trade scanner in a minute, but if we're looking at this as opposed to, check this out, what we just talked about with dollar yen, if you were to short dollar yen, that is a very expensive trade because the base currency, US dollar, is trading, it's offering a high interest rate. So if you short that, you have to pay that, right? That's how that interest works. So you're paying that. Meanwhile, JPY offering just 0.5%. So you're paying this, getting paid this. You can see there's a spread. If you do the opposite, if you buy dollar yen, you get paid a positive spread. But that's actually a really good, this chart here is an excellent way. If you are bullish on the yen, like James and myself both are right now, maybe the way to play it is to play it against currencies that you're not going to get, absolutely killed on the swap if you have to hold it for 2 months, right? And as you just mentioned, what if the Bank of Japan, in this case, the quote currency, goes up? Let's say it goes to 0.75. Now there is actually a thin spread. Now, one disclaimer here is that most brokerages, they have a little bit of a tax that they charge on top of this differential with holding costs. So you may still slightly be in the negative, even though the swap is even. Different currency brokerages offer different kind of taxes on, if you will. Tax is not the right word, but there's a little bit of an actual fee that goes into the swap on top of the interest rate differential for processing your trades. But if that number were to get bigger for Japan, we could actually see, like you're pointing out, James, it's a good point. You could actually see a positive rate differential in favor of shorting Swiss, buying yen.
Yeah, exactly. So I think if you've got very minimal swaps to start with, and generally just minimal fees to the trade, I think it's definitely got the potential for long-term holds. So yeah, I'm going to look to execute at some point, probably late next week, obviously, if we can see some sort of relevant pullback.
Yeah.
But yeah, at the moment, not really ready to execute. As I said, it's just a little bit oversold my first entry. Just want to see that nice daily pullback to get into.
Yeah, I like that. And Swiss yen, it's funny you mentioned it, because that was actually one that I was looking at as well. Swiss yen is on the edge finder. Everything on the edge finder is pretty much pointing to yen bullishness as well. The issue that I see with the yen crosses and why I'm so selective is exactly what we're talking about. The carry is expensive. So if I'm going to play it, Swiss yen looks like a really interesting candidate, just kind of a pure, if I want to be long the yen play, short the one that offers the lowest borrowing cost by the Japanese yen. So I like that trade, and I'm with you on it looks a little bit oversold at the moment, but if you get some swing backs in the other direction, perhaps Swiss yen is a nice longer term short. I don't hate it. I actually really like the idea.
Yeah. So I've actually just taken two more position trades. Actually, I'm going quite heavy on them to start the year. I've got one on silver here, looking towards sort of $37 to $40. So again, just hold this one probably for the rest of the year, see what happens. Not in very heavy on silver because I'm not a huge silver person, but again, I think it's relatively undervalued compared to specifically gold. And same thing here on dollar Swiss that we were just talking about. The Swiss, I think there is some long-term downside coming on the Swiss, and the dollar, I'm not too interested in long-term dollar strength. I'm more just banking on the stability of the US economy and using that as a proxy to then go and short the Swiss. Yeah,
no, that's another good trade. I like that one as well. Dollar Swiss is also, I always like to point out that it has very high correlation to the dollar index. So it's one way to kind of play dollar index if you're interested in that. Dollar index, by the way, US stock market just opened up. We're seeing a little bit of downside.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.